So today's trading takeout is based on how to use sentiment effectively in your trading, and I'm going to have to change the words that were used by a gentleman that told me this a long time ago now, about 10-ish years ago, let's say. And trading is basically, okay, so you've got lots of people who don't necessarily know what they're doing in terms of, retail traders. I hope you guys do know what you're doing, but many don't. That's why the numbers are so against them. It's fair to say. And you've got to think of, okay, if the numbers are so against them and it's showing that many people are long the book one way, how can we, I'm going to say steamroller rather than the original words, how can we steamroller these people? When's the best time to steamroller these people? And because most use technicals, okay, they don't necessarily understand the volatility drivers of the market. So, for example, we spoke about sterling just earlier. Okay, will that be considered in a technical trader's repertoire? They might pay attention to it, but what are they thinking about beyond the initial event? Are they thinking, okay, people are repositioning into bonds, for example, because bonds might start going up on a softer interest rate move, these kind of things. So what does that then mean for the currency? If bond yields are going down, does that mean that the currency weakens? And that's kind of my thinking there. I don't think they pay attention to this stuff. So there might be a nice support drawn, and they might be buying that, getting long, thinking, oh yeah, it's going up. Fear of missing out jumps in, but then the actual macro stuff takes them out. And when you can identify that uninformed traders are very, very long one side and the book is weighted too heavily one side, it means that there's lots of stops that you can take out on the downside or upside, whichever way you're going. And that tends to be how I like to think of things in the market. Not for too long. This is more sort of maybe intraday, maybe, a bit of a swing type thing, but it tends to be very momentum driven, especially in the FX stuff. And it tends to be quite a nice way to realize when your signal is right and realize when your signal is wrong, because it does move quite quickly if you tend to be right on the idea.